Hello, everyone. Welcome back to our channel, where we dive deep into the economic data, global events, and insights shaping the financial markets. In this video, we'll be looking at three key markets to watch this week: the US500, CH50cash, and GBPUSD. With major updates expected from the United States, China, and the United Kingdom, let's take a closer look at how these events could impact these markets and your trading strategies. 1. US500 Index. Starting with the US500, or the S&P 500 Index, it's set to be an exciting week for US markets. Last week was significant, with a mix of political and economic events, including the results of the US elections and the Federal Reserve's decision to cut interest rates by 25 basis points. Fed Chair Jerome Powell's comments, particularly his dovish tone on future rate cuts, were closely watched. Powell emphasized that the Fed's policy is going to be data-driven, meaning that upcoming economic data releases could influence future rate decisions. This week, inflation data is front and center, starting with the U.S. Consumer Price Index (CPI) report on Wednesday and the Producer Price Index (PPI) report on Thursday. Inflation has been the major story for investors, as they've been grappling with how much longer the Fed might keep rates elevated. In recent months, we've seen a slight uptick in the core CPI reading, which suggests inflation may not be cooling off as quickly as some had hoped. For the US 500 index, these data points are crucial because they have the potential to cause significant market movements. If inflation remains stubbornly high, it could fuel speculation that the Fed will continue its rate tightening path longer than expected, potentially putting pressure on equity prices. However, if inflation starts to trend lower, this could be a bullish signal, as investors may interpret it as a sign that the Fed could slow down or even pause future rate hikes. It's also worth noting that the US 500 is currently sitting near historical highs. At these levels, any surprises in the CPI or PPI reports could lead to increased volatility as traders adjust their expectations around the Fed's policy stance. In terms of trading strategy, it might be wise to watch for any breakout or pullback scenarios around these key events. 2. CH50cash Index. Next up, we have the CH50cash Index, which represents the Chinese stock market and is heavily influenced by both domestic and international factors. Last week, China faced two significant developments. First, the U.S. midterm elections resulted in a decisive victory for the Republican Party, which could signal a more hawkish approach toward China. There are concerns that this political shift may reignite trade tensions or lead to new tariffs on Chinese goods, potentially impacting Chinese exports and the overall economy. On the domestic front, the Standing Committee of the National People's Congress convened last week to discuss additional stimulus measures aimed at bolstering economic growth. China's economy has faced considerable headwinds this year, from a slowing global economy to ongoing issues within the real estate sector. There's growing anticipation that the Chinese government might introduce new policies to stimulate economic activity and support its struggling industries. Investors in the CH50cash Index will be watching closely for any updates on trade policy from the US or new economic support measures from China's government. Any major announcements could lead to substantial moves in the Chinese market. If we see an announcement of new stimulus, it could be a bullish signal for Chinese stocks as it may alleviate some of the pressure on key sectors within the economy. However, if trade tensions escalate, this could be bearish for the CH50cash Index, as Chinese exports could face further constraints. For traders, it's essential to keep an eye on these developments and consider the potential volatility they may introduce to the Chinese markets. The CH50cash could see significant price swings as these geopolitical and economic developments unfold. 3. GBPUSD currency pair. Finally, we turn our attention to the GBPUSD, or the British pound against the US dollar. This week, the UK is set to release some highly anticipated economic data, including its GDP report and labour market report. The Bank of England recently raised its inflation forecast for 2025 to 2.75% from 2.25% and also increased its growth projection for the following year to 1.5% from 1.0%. These revisions underscore the UK's persistent inflation challenges and the Bank of England's optimistic view of economic growth. Investors and economists will be closely watching the upcoming GDP and labor market data to assess whether this optimistic outlook is justified. Positive GDP data or an improvement in the labor market could support the Bank of England's decision to maintain a tighter monetary policy stance, which might give the pound some support against the dollar. However, if the data shows signs of weakness, it could raise doubts about the UK's economic resilience and potentially weigh on the pound. This data release is expected on Tuesday and Friday, so be prepared for potential volatility in the GBPUSD pair on those days. For traders, this week's data provides an excellent opportunity to watch for potential breakout trades in the GBPUSD. With the UK economy at a critical juncture, any surprises in the data could create a directional move in the pound. If the data supports growth and inflation is contained, we might see the pound strengthen. Conversely, weak data could lead to a pullback in the GBPUSD pair. In summary, the US500, CH50cash, and GBPUSD are all markets to watch closely this week. The US CPI and PPI inflation reports, China's potential for further stimulus, and the UK's GDP and labor market data are all events that could drive volatility and create trading opportunities. Remember to manage your risk carefully, as these events can lead to sharp market moves. If you found this analysis helpful, make sure to hit the like button, subscribe for more market insights, and ring the bell for notifications on our latest videos. Let us know in the comments which market you're watching most closely this week. Thanks for tuning in, and happy trading.